Hello and welcome to our panel discussion. I'm delighted to be joined by three buy-to-let gurus who've generously agreed to share some of their time and some of their thoughts with us. They are Phil Rickards, Head of BM Solutions, one of the biggest buy-to-let lenders in the country, Steve Cox, Chief Commercial Officer of Fleet Mortgages, a specialist buy-to-let provider, and Jane Simpson, MD of TBMC, the specialist advisor firm specifically committed to the buy-to-let sector. Welcome all, and thanks very much indeed for joining me. Well, if we can go straight into the questions. Phil, you were kind enough to deliver the opening session of the event this morning, which on the whole was pretty upbeat about the future of the market, which is great. But we have, of course, seen some challenges and difficulties over the last year, of many people experiencing impaired finances. At one point, around 1 million tenants were said to be struggling to pay their rent, and of course, landlords weren't allowed to evict them. So how has this impacted buy-to-let landlords and their own ability to pay? If I can ask you that one, Phil, first, please.
Yeah, great question, Paula, to start us off. I think the positive is that landlords were, of course, included in the payment holiday scheme, which I think to many came as a surprise. Normally, landlords are way down the pecking order when it comes to government support, as we know. And I think there's definitely some foundation in what you're saying. There was a recent report done by the charity Step Change, which told us that, potentially 150,000 tenants could be evicted from their properties. That kind of feels like it's at the extreme end, but it's definitely going to be something that we need to keep a very close eye on as evictions are allowed to happen from May onwards. I think in terms of landlords' own businesses, the last round of BDRC research, which is a very strong panel of landlord research, told us that landlords on the whole were feeling upbeat about their own businesses, which is a positive. 88% of landlords still told us that they made a profit. And I think from a lender's perspective, we've obviously had a very close eye on arrears and landlords paying their own mortgages back. And we as a lender are not seeing a dramatic turn for the worst in the arrears position. So I think on the whole, we're expecting some fallout, but certainly at the moment, it's not looking as bad as it could be.
And Steve, obviously you've got slightly different landlord-borrower profile. What's your experience been?
I think it's certainly changed from where we were just over a year ago. So when the payment holiday initiative was introduced, I think firstly it was probably misnamed. A holiday implies something nice and fun. So payment deferral might have been a better definition. And of course, we like everyone else, saw a surge initially of landlords contacting us looking for help. But I think that very, very quickly, we saw a situation where perhaps with furlough helping people in general, not just tenants, a tidal wave of trouble didn't perhaps come over the hill in the first part of this that landlords might have expected. And then we saw landlords coming to us unsolicited saying, look, I have made this arrangement, but actually I want to unwind this now because I just don't need it. So that was kind of the first part of this situation. Phil's absolutely right. We need to keep an eye on how things evolve. With furlough now set to expire later this year, that may have an issue on tenants' ability to pay. But the landlords are a resilient bunch. They've always seemingly factored in rental void into their calculations when they're looking at whether a deal works or not. So we don't see that problem today, but we do need to keep an eye on the changing situation, and lenders need to support where appropriate as we move through the remainder of this year.
Okay, thanks. That's relatively positive. Jane, from an advisor angle, have you seen a shift in borrower profiles, and should we expect more landlords to be matched with more specialist providers in the future, which would play into Steve's hands, due to him having more complex financial circumstances because of the pandemic?
Currently, not really. We haven't seen a great increase in people with any kind of credit issues, particularly any that have derived from COVID. Although a bit like Phil and Steve have touched on, we've got the furlough schemes and the mortgage payment holidays there. So I think they're easing the burden at the moment. So when those are off the table, we might start to see some tenants and therefore landlords being affected. What we have seen is, and Steve just touched on the payment holidays, and what we have seen is some landlords that took the payment holiday up front, because as Steve said, it sounded like a really good thing to do. And then they went for further borrowing and with that particular lender, and then they weren't able to get it because obviously that lender thinks they've got issues and they're not able to pay. So I think the way that was put across probably wasn't the best. And from what I'm hearing from a lot of lenders, a lot of the landlords are now starting to pay those back a little quicker than you might have expected, because they've subsequently seen that could affect future borrowing. I think from the buy-to-let marketplace, it's quite a diverse marketplace and there are lots of options out there. So certainly if we do see landlords coming through that have got credit issues, there's usually somewhere we can place them. I think my only caveat to that would be that missed mortgage payments is always something that's particularly hard to place. So, you know, I guess that the lenders need to look at whether or not for the right landlord, there's any easing of criteria that can be done if there's genuine situations that are coming through that they feel is a good landlord tenant and they want to continue to lend to them. I also think on the flip side, we are seeing a lot of new landlords coming in and where people have been unable to spend money, there's a lot of savings. So it's been a bit of both really. Some people are worse off for it, but some people seem to be very well off from savings. So we might start to see a whole new tranche of landlords coming through that have got these savings that they've made through this COVID period and want something to do with it. So, you know, there could be a positive there as well, I think.
Now, landlords across the country breathed a sigh of relief in late March when the Treasury announced it would not be raising capital gains tax on the sale of buy-to-let property from its current levels of 18% for basic rate taxpayers and 28% for higher rate taxpayers. If they had increased the levels, that move might have dampened the market and pushed even more investors down the limited company route. Recent BDRC research suggests that 50% of landlords were intending to buy their next property through a company before the HMRC announcement. Do you think we'll now see a levelling off in numbers of landlords incorporating? As a large lender which famously offer limited company buy-to-let as an option, what's your view, please, Phil?
Thanks. I thought this might be coming my way. If I had £1 for every time I'd been asked this question, I would be retired by now. Joking aside, you know, most incorporation still happens on purchase, although we're seeing more incorporation of existing portfolios. And a stat that made me sort of jump up and have a second look was, I think it was the second most registered company activity on Companies House, which was limited company for buy-to-let last year. But looking at our own business model, which Paula, as you quite rightly say, is the more traditional sector of the market, so rental coverage ratio assessed on a single property basis, small to medium-sized portfolios, and that's where we've really set our stall out. We've had a tremendous year. In fact, I don't mind sharing, we've had our biggest year in new business in 2020 since 2007, and that was the biggest year on record for buy-to-let lending. So we're certainly not seeing any impact directly on our own business at the moment. But what that does do is it leaves a good percentage of the market then for the specialist lenders. And I think having that choice of lenders that clearly set out their stall to do different things is really important for brokers to know exactly which lender they should be going to do what business. So to answer the question, I'm not saying it's peaked. You know, there's definitely a desire for landlords to incorporate, but certainly from what we're seeing, there's plenty of business in both sectors to go around.
Thank you for that and congratulations. And Steve, what's your view on that?
Well, I think we've seen a business mix stay fairly stable. I mean, limited company mix has ticked up a little. It represents just over 40% of what we do at Fleet Mortgages. I think the key issue here is the disincentive of CGT for a lot of people to go down the incorporated route. So perhaps we have seen it level off, but of course it doesn't mean it won't change over time, particularly within people's individual tax situations may just lead them to a scenario where with appropriate advice it's the right vehicle for them. But we've certainly not seen a surge. It's been pretty stable and we think that may well remain the case.
How about you, Jane, from the advisor perspective? Have you seen a surge or is it pretty much business as usual?
Yeah, pretty much business as usual. Limited company tends to equate for about 30% of our business, and that's been fairly consistent over the last few years. We see landlords move into limited companies for a variety of reasons, from inheritance tax planning to reducing income tax bills. So I think that regardless of CGT, there will still be a space for limited company incorporation. And as Phil touched on, I think last year it was over 40,000 limited company incorporated for the purpose of property. So particularly high numbers, and the inquiries are still coming through. So I expect that to remain.
Yeah, second only to online retail, I think. Yeah, huge numbers. Thank you for that. Thanks. Right, let's now turn to the issue of sustainability and the green agenda. As we know, since the 1st of April this year, it's a legal requirement now for all buy-to-let properties to have an energy performance rating of E or higher, and from 2025 that goes to C or higher for new tenancies, and all tenancies D28. Some lenders, as we know, are already offering products with LTVs or rates linked to EPC rating. Will we see more of this, do you think? Steve first, please.
Yeah, I think we will see more. For us as a non-bank lender, it's probably a slightly more elongated process where we need to have a clear proposition with all the stakeholders in the chain, funding partners, and obviously working with everybody involved in the capital markets chain to get it right. I think simplistically, anything that helps, if you like, reduce the running costs of the property, both for a landlord and a tenant's perspective, is just a good thing. It's an agenda that's incredibly important. It's not going to go away. It may take non-bank lenders a little longer to get there, but it's certainly on our radar, and I think it will only increase over time, particularly as the bond investors in the capital markets are keen on this type of asset class as well. It will climb quite quickly, I think, throughout this year and beyond.
Thank you, Steve. Phil, what's your position?
Yeah, I tend to agree with Steve. Earlier on, I talked about this as a threat as well as an opportunity, and it wasn't a threat to the green agenda as such, because the green agenda is a brilliant thing, let's be honest. Environmentally, it's important. It's more a threat to landlords and their cash flow and having to bring existing stock up to scratch in what could be seen as a relatively short period of time. You know, you've set out the timescales, Paula, and I think for many landlords that could be a challenge. So any help that lenders can bring to a landlord, so you know, further advances to help improve properties, better rated products for better rated properties, all of those things will definitely evolve, and it's something as a lender we've got a very close lens on, and are working very hard behind the scenes to bring a solution to market when the time is right for us.
Great, we'll keep an eye out for that. Jane, do you think advisors are sufficiently aware of the green agenda and of schemes like the Green Homes Grant, which can help landlords, and do we need more of these schemes?
I'm not sure the brokers are sufficiently aware, if I'm honest, or if they are, they're perhaps not utilising it as they could to A, help their landlord customers, and B, to push their business forward. So I think that brokers with landlord customers should be discussing portfolios with them, looking at the properties and seeing what properties are below a C rating, which they can then apply for the Green Grant for, and seeing how they can then help them to raise the money they need to put in themselves. So whether that be capital raising on that property or across the whole portfolio. So I think there's a piece of work that a broker could do with a landlord customer to make sure they can take advantage of these green grants and have the money themselves to put in to bring the properties up. Because I mean, it's great for the landlord to be able to utilise this government funding, because it's money they're going to have to spend at some point in the next 4 years. So I think there's a really good piece of work that brokers could be doing that's going to bring more business to them, but also help their landlord customers as well. I think it's a great scheme, not just for the green agenda, but also for landlords, because it always seems that, you know, they have it tough. So finally, there's something that, you know, they're able to get from this government scheme. It's great for tenants in the private rental sector because it's bringing property standards up, and therefore it's better for the buy-to-let marketplace and brokers as a whole. So, you know, it is really great. I would like to see more innovative products from landlords, from lenders, if we could, perhaps tying in this kind of green agenda so that it brings it to the forefront of brokers' minds as well.
With the rise of the enforced staycation, there's a strong demand for holiday lets and massive margins to be made if any of the websites I've looked at are to go by. And according to research published by Arla in January, 1 in 10 buy-to-let landlords then said they were considering switching to short-term lets. Why are most lenders still reluctant to enter this sector with products priced appropriately for risk? Phil first, please.
It's a great question, because it doesn't take a genius to work out that there's already been a massive rise, or there will be if we weren't in sort of enforced lockdowns in and out. In staycations, the UK is definitely going to be a more popular place to holiday going forward. And some of the yields that are available or will be available on holiday lets are definitely going to be attractive to landlords. So it's definitely going to be a growing part of the market. Specifically from a BM perspective, I don't mind sharing, and it's common knowledge to the market, that we're going through a huge transformation program at the moment. We're migrating our core system across to the bank's core platform, which we've done the first phase of. We've got follow-up phases to come, which is product transfers, further advances, and all of the existing business systems to follow on later this year. So all of our development resource at the moment is going into making sure we do a good job of that. But we do have a list of things we've got to watch on, and holiday lets is very near the top of the list.
We'll watch this space. Steve, how about you?
Well, we firmly believe the holiday let market's underserved, and it does represent a big opportunity. For us at Fleet, again, this is something that's perhaps a bit more complicated to get a proposition out there fit for purpose, because we are a non-bank lender reliant on the capital markets. So in a lot of the capital market circles, a loan secured against this kind of transaction is viewed perhaps a bit more as a commercial transaction. And at the moment, we don't issue commercial mortgage-backed security loans or transactions. We're in constant conversation with our funders. We definitely see this as an opportunity for all concerned, but with in the capital markets, it's just a little bit. It's something that perhaps isn't quite there yet in terms of looking at it from a more residential slant as opposed to a commercial slant. So I'd never say never. We'd love to do it. We're not quite there yet because we are constrained by capital markets.
Sure. Thanks for that, Steve. Jane, what levels of interest are you seeing in holiday lets? Do you think there's enough supply from the range of lenders currently in the market, or would you like to see more?
We definitely like to see more. We've seen a fair amount of interest, but something we have noticed is most of that interest seems to be coming from first-time landlords. So not so much our portfolio landlords that are quite happy in the private rented sector, comfortable in the area they're operating in, but it's actually these new landlords that they've either been on a staycation, fallen in love with the area, quite fancy a property that they can holiday in as well, or they've got some cash that they've stored up through this pandemic and they're wondering where they can invest it. So there's a lot of first-time landlords that are looking at this, and there's not really a lot of opportunity for them. So we deal with 50 lenders approximately, and there's 3 that will do first-time landlord holiday lets. So a very small number. We've got about 8 in total that will do holiday lets at the moment. Obviously, quite a lot of lenders went out of the holiday let market, and we are seeing them trickling back in. But I think for a lender, if you do want to be in that area, then you do need to also be thinking about the type of landlord that is looking at that, and that really is first-time landlords at the moment.
Okay, interesting. Phil's nodding there. Listening.
Yeah, it's good. And I had no idea that it was that far underserved, to Steve's point earlier on. So it's good to hear that.
Great. Thank you. Thank you, guys. Moving on now to overseas investors. Overseas buyers have invested heavily in UK residential property for some time now. Do you expect that to continue, or will the Chancellor's extra 2% levy on foreign property purchases dampen that demand going forwards? Jane, do you have many overseas clients, and are you seeing a change, if so?
We have a fair number of inquiries that come through, but they don't always, a bit like the holiday lets, they don't always come to fruition. We get a lot of expat applications, but actually expats has the highest drop-off rate of all types of business to ourselves. So that's for a multitude of reasons, but often those applications are just far more complicated, and there's far more reasons that come along during the process and quite near to the end that can cause them to drop off. So I think, you know, the levy for expats might be something that is just another hurdle. I'm not sure, we don't get as many foreign national applications coming through, and I'm not sure the levy will have such a big impact on your wealthy foreign investor, because, you know, if they've got that amount of money to put into the property, and if the UK housing market looks to be a good option for them, I'm not sure the extra 2% is going to turn them away. So I think it'll be a bit of a mix. Maybe, yes, it'll stop some expats, maybe not so much on the foreign national side.
I guess a lot of them are cash buyers. So, Steve, are you involved in that sort of market at all?
It's not something, again, we're currently involved in, but I'd agree with Jane there. As in overseas investors, a lot of it does tend to be cash. Historically, a lot of it has been prime real estate in London. So the 2% levy is potentially just another cost of doing that transaction. So if the willingness is there to still make that investment, it's just a higher tariff to enter and invest. But so I don't see it will dampen it significantly. But again, perhaps expats, it will be a hurdle, and that may dampen it down. But in general, no, we still think that overseas investors will invest in UK housing.
Phil, do you want to add anything to that?
I think every time you've seen a challenge come to the buy-to-let market in general, and this is a slightly different market, as Steve and Jane have said, the 3% stamp duty would be a great example of investors just finding a way of accommodating that additional cost in the overall transaction. And, you know, alternative investments outside of property still don't look that attractive, do they? You know, from an uncertain perspective, and also from a low return perspective, and property is still a good long-term investment. So I would agree.
I think as well, Phil, picking up on what you just said about the assumption that the first cliff edge of stamp duty ending would have dampened purchase business immediately after Christmas, when it was obviously on the horizon. It just didn't happen for us at all. Way before the extension that the Chancellor announced, we were pleasantly surprised that the purchase business mix was still holding up. So completely agree that the landlords were just seeing it as a bonus if they could squeeze the transaction through before the prevailing deadline. But if it didn't go through and the deal worked and the yields worked, they were probably still going to do the deal anyway. And it's just a cost of doing that investment transaction.
Thanks, Steve. Yeah, resilient bunch, our landlords. Moving on to new subject. How badly has the cladding issue impacted the buy-to-let sector, and what can and should be done about it? Can I ask Phil that one first, please?
Yeah, do you know what? It's such an emotive topic, isn't it? Given what happened to start the whole cladding issue off, and could it be handled? Could it have been handled better as an industry? Absolutely. Could the guidance going forward been better and more clearer? Absolutely. And I think as an industry, we've worked really hard to try and issue some as clear guidelines as we possibly can. It's definitely impacted some lending on apartments, you know, and I don't want to use the term trapped borrowers, but, you know, there's certainly been some borrowers that have found it hard to remortgage or to move on from existing properties. On the whole, though, it's not been a wholesale issue for us as a lender. And we've worked really hard with our valuers to make sure that brokers have got as clear guidance under the current guidelines as we possibly can. So I think as an industry, we've done the best we can. And I think, you know, central guidance could have been better than it has been.
Thank you. Steve, what do you think?
Yeah, I'd agree with Phil. I think perhaps further or clearer government intervention earlier on would have been helpful to all concerned. We haven't seen a huge issue with it, but it is something that needs sorting out. It's going to run and run, and I think the government stance on this is going to be key to helping those that are trapped.
Thanks. And Jane, anything to add to that?
No, I pretty much agree with what Phil and Steve have said. I think we actually saw a slowdown quite some time ago of landlords purchasing these types of properties as new. So it certainly hasn't affected new purchases. I think it might have affected some landlords that potentially want to release capital or sell a property on to change their portfolio. but we're not seeing a huge problem. I think it's good to see that lenders are welcoming the extra guidance from Rickards now, and it looks like we're starting to sort of make our way through it, really. So
thank you very much for that. Now I'm aware of time. I think we've come to pretty much our last question. In fact, it is our last question. This year is the 5-year anniversary of the introduction of the 3% stamp duty surcharge on investment property. And of course, there was a spike in activity before it came in, including many 5-year fixed rates, which will mature later this year. So we're expecting a surge in remortgaging in the second half of the year. What are lenders doing to prepare, and how should brokers be positioning themselves? That question first to Steve, please.
Well, I think it's not just the 5-year anniversary where there's an awful lot of remortgage business up for grabs this year. It's just the general economic backdrop we find ourselves in that, you know, buy-to-let is counter-cyclical. And if we look at every economic downturn, demand for tenancy naturally rises. So I think it's almost a double-edged sword from the broker's point of view, and a huge amount of opportunity for brokers and lenders. In that, you know, if we look at that rising tenancy demand, where's it going to be sucked up? We don't really have a social housing policy per se in the UK, so it's inevitable that tenancy demand is going to enter the private rental sector. So that's a positive for landlords, lenders and brokers alike. If we add on top of that the extra layer of the 5-year anniversary, all the huge amount of product maturity, in a way, this could be the perfect storm for buy-to-let in terms of volumes that we see through the remainder of this year and beyond. How we all gear up for it, we need to have appropriate products to meet those needs. We need to resource it to preserve service from a lender's point of view. But what's going to underpin all this is the need for quality advice from the landlord customers. So if you add those two things together, we think it's going to be a phenomenal year for all concerned.
Bill, obviously record year last year, could be even bigger this year by the sound of it. How are you preparing?
Yeah, do you know, I think Steve touches on something really important there. I talked about it earlier on. It's the fact that brokers now write just under 80% of all mortgage business written. And there's never been a better time to be a mortgage broker. So Steve's point about advice is key. You know, they've got to stay close to the tenant. And, you know, I think lenders will be ready. We've learned a lot over the last 12 months about working remotely. I think, please bear with us. You know, we're still predominantly, from a BM perspective, have our processing teams working from home, but we've learned how to be more efficient. And having already, as you say, Paula, written big volumes of business in 2020, we'll definitely be ready for it. And we're doing our absolute best to support brokers. The one thing I would say, though, is from an advisor perspective, that the better packaged your mortgage that comes into us, the smoother the application to offer journey will be. And I think that's going to be key.
Brilliant. Can I give the last word then to Jane, please?
Yeah, so from a broker's perspective, I think they should be looking through their diary system and contacting customers well ahead of schedule. There's some great retention rates out there in the marketplace that can be applied for really quickly, and a particularly light touch on fees. But likewise, interest rates are really low at the moment, and there's loads of competition. So it's a great time for landlords to be capital raising, further purchases, growing their portfolio. So I think just sit down with the landlords and understand what their goals are, and help them to create that by remortgaging properties, and work with them to almost become, you know, a partner in building that business for them.
Thank you very much. And on that positive note, we will end our discussion. I'd just like to say thank you very much to all three of our speakers, and thank you very much for listening. Goodbye.